Business and consumer confidence around Australia have improved over the last month thanks to a wide range of factors, although there's a long way to go to fully recover from the COVID-19 recession. An update on our views for the economy and the markets as we race towards 2021. The RBA delivered their rate cut as forecast on Melbourne Cup Day, adding further support to borrowers, especially via fixed rates, thanks to quantitative easing. Although they did flag that this would be the last rate cut in the series and that negative interest rates are not on their roadmap. Later last week, the RBA upgraded their forecasts for economic growth and jobs in 2021, with GDP in the recession reaching its low point mid-year, down over 7%. But the rebound will be around 3% in the second half of this year and up to another 5% gain next year. The recession was incredibly uneven and indiscriminate, hitting different industries and regions to vastly different degrees, and the recovery will probably be equally uneven. As always, there will be upside and downside scenarios that need to be considered, but the latest news does seem to be pointing in the right direction, including new COVID case numbers down to zero for over a week now in Victoria, sharp gains in stock markets, in part thanks to the US election outcome, stabilising property prices locally, and encouraging news on vaccine testing. When combining all of this with the tax cuts kicking in and another extension to the Job Seeker supplement, it all sounds promising. The trick from here, however, may be how we respond to all the policy incentives. So far, the rise in income levels, thanks to all the government support, has been saved rather than spent. So, will this pick-up in confidence encourage spending, and will businesses take the incentives to invest and to hire new workers? This will also depend on how quickly we reopen borders and whether local tourism can offset the absence of international tourists. Keeping the virus at bay remains crucial and will allow us to join travel bubbles with other countries in the same position. The financial markets are back in a risk-on mood after the uncertainty of the US election is behind us, or at least confined to the courts. And so, both the stock market and the Aussie dollar are back on the rise. Our share market had been lagging the US and tech stocks in particular, but if the vaccine news keeps improving, then the V-shape that is halfway there might fully form and avoid a W-shape. The same can be said for property prices, which rose nationally in October for the first time since the global pandemic, hopefully a sign of further confidence in 2021. The same unknowns are still in play, but there's been progress made, and we'll take any small wins for the moment. And that's the market update from Leveraged.